So our first topic, of course, is auditing and assurance engagement. And when we talk about auditing is categorized into two. That is auditing and assurance engagement. Assurance engagement is categorized into two. Now, we have assurance engagement itself, the assurance engagement. And number two, we have non-assurance engagement. I want to repeat. Assurance engagement, this is categorized into two. Number one, we have the assurance engagement itself. And number two, we have non-assurance engagement. Now, when we talk about assurance engagement, this refers to the process of examination, of books of accounts with the intention of trying to confirm whether these books of account conforms to a certain criteria in order to increase the degree of confidence of the intended users of these books of account by giving either reasonable assurance or limited assurance. I want you to follow keenly. So when you talk about assurance engagement, please, I want you to follow keenly, because as we continue, there are some changes that I'll be making in our introductory part. And before I make those changes, of course, I want us to understand what we are actually working on. So when we talk about assurance engagement, we have said assurance engagement is categorized into two. Number one, we have said we have the assurance engagement itself, and number two, we have non-assurance engagement. Now, assurance engagement, we have said this refers to the process of examination of books of account with the intention of trying to increase the degree of confidence of the intended users of these books of account by giving either reasonable assurance or giving a limited form of assurance. So meaning, when you're working on this, by the end of the day, you need to give a reasonable assurance or you can give a limited form of assurance. Now, before I go down into this, I just want to introduce something. I've said the assurance engagement, it is the process of examination of books of account in order to confirm whether these books of account, do they conform to set criteria? Then the question is, then what is that criteria? And we are saying, we are confirmed whether they conform to a set criteria in order to increase the degree of confidence of the intended users of these books of account. Meaning, when we are doing all these activities, we are doing for the sake of the users of these books of account. Now, that introduces us to elements of assurance engagement. Elements of assurance engagement. Meaning, before I go back to my definition, let's get to understand. When we talk about elements of assurance engagement, what are we referring to? That is now element of assurance engagement. Now, we have 5 elements of assurance engagement. Of course, I'll be giving you an acronym to help you to remember. That is CRASH. We have 5 elements of assurance engagement. Of course, I've given you an acronym to help you to remember. That is now the CRASH. Now, when we talk of CRASH, this refers to criteria. We have reports, we have evidence, we have subject matter, and of course we have 3-party relationship. 3-party relationship, which entails the end user, that is the intended user. We have the end user or the intended user. Number 2, we have the responsible party. And of course, we have the practitioner. I'll bring this for the purpose of understanding, so that when we be discussing this definition, of course, it will make some sense to us. So we have said We have 5 elements of assurance engagement. Number 1, we have criteria, we have report, we have evidence, we have subject matter, and we have three-party relationship. Remember what we have just said there? When we were discussing this process, we said it is a process of examination of books of account in order to confirm whether these books of account conform to a certain criteria. Then the question is, then what is criteria? Now, when we talk of criteria, this refers to the benchmarks that we expect a financial statement should conform to them. Meaning a benchmark, criteria, this refers to a benchmark or the accounting standards that we expect the financial statement should conform to them. Now, that tells us something then. When we are preparing the financial statement or the books of account, of course, we expect these books of account to conform to IFRS. We expect these books of account to conform to ISAE, that is the International Standard of Assurance Engagement. We expect these books of account, of course, should conform to IAS, that is the International Accounting Standards. Of course, when we are practicing, we are supposed to conform to ISA, that is International Standard of Auditing. Meaning, when we talk of criteria, this refers to a benchmark that we expect a financial statement should conform to that criteria. Meaning, again, when we are talking of criteria, we can refer to concepts. So once I give you the financial statement, of course, there are those principles that we expect a financial statement should conform to them. I'm trying to think of prudence concept. And remember, prudence concept state that we are expected to disclose income once we have received. Now, if it's an expense, then it means we can disclose expense either incurred or not. Then when it comes to stock, okay, of course, we are told we can only disclose stock at cost or lower of cost. Meaning, when you are doing an assurance engagement as an auditor, then your business to confirm that stock that they disclose in their financial statement, that is the balance sheet, is it at cost or lower of cost? Meaning, if it is not at cost or maybe lower of cost, then it means that financial statement does not conform to the said criteria. Meaning, when you talk of criteria, this refers to the benchmark of the standards that we expect the financial statement should conform to them. Then number 2, we have report. When you talk of report, this refers to the ultimate product that we expect to give as an auditor after you have examined the books of account and you have gathered sufficient appropriate evidence. Meaning, when we talk about report, this refers to the ultimate product that we expect a financial statement, that we expect that an auditor should give once he has audited the financial statement of that organization. And of course, number 3, we have evidence. Now, evidence, this refers to the outcome information. Evidence, this refers to the outcome information that we get after we have examined the books of account. Meaning, it's my business as an auditor to confirm by the end of the day, do I have sufficient appropriate evidence for the purpose of forming an opinion? Meaning, I'll be expected to express an opinion. Now, for the purpose of assurance engagement, I'll be expected to express either reasonable assurance or limited form of assurance, depending on the information that I gather. Meaning, when I'm gathering evidence, then the evidence, it is the outcome information that you get after you have examined these books of account. Now, let's confirm something here. When you're doing your audit assignment, you might not be limited to only books of account. And now, that's what takes us to the subject matter. Now, when you talk of subject, yes? Joel, how are you? So, when you talk of subject matter, this refers to the phenomenon or the item that is being audited. Meaning, as an auditor, when you're doing your audit work, you can audit the books of account, stop the financial statement. You'll be expected to evaluate the internal control systems, you are expected to work on the processes of organization. Meaning, when we talk of subject matter, this refers to the phenomenon or the item that is being audited. Now, that tells us something. When you talk of the process of examination of books of account, that means we are a bit of narrow, because we can audit the books of account, whereby here we are expected to work on the assertions. We can also be auditing the internal control system, where we want to confirm whether this internal control system, are they efficient and effective, or maybe are they weak, or are they strong? When you are looking at the processes here, this is where you are interested on capacity. Meaning, it's my business as an auditor, even before I express either reasonable assurance or limited assurance, then I need to confirm, do I have sufficient appropriate evidence in that respect? Either, what about the assertion that the management used when they were preparing the financial statement? I'm working with the financial statement here. Or what about the internal control system of this organization? Are they weak or are they strong? Meaning I'm working with the internal control system. Or what about the capacity based on the information that the management has provided to us for the purpose of auditing? Meaning, as an auditor, you're supposed to gather sufficient appropriate evidence on the subject matter that you are auditing. Then finally, we have three-party relationship. Now, when we talk about three-party relationship here, we are referring to, we can have the intended user or the end user. Three-party relationship, we can have the responsible party, or probably we can have the practitioner. Now, when you talk of a practitioner, this refers to the professional. Like now, you are preparing yourself, you are equipping yourself to become a practitioner, meaning you are the professional. When you talk of a responsible party, this refers to the management. That is that person who has the responsibility to prepare the financial statement. Then finally, of course, we have the end of the intended user. That is the person who expects to get a report from you to make a decision based on that information that you have provided to him. Meaning, when we talk of elements of assurance engagement, we have said we have 5 elements of assurance engagement. We have said we have the criteria, we have report, we have evidence, of course, we have the subject matter, and we have three-party relationship. Now, with that understanding, then allow me to come back here to our definition. So when we talk about assurance engagement, we see it is a process of examination of books of account with the intention trying to confirm whether these books of account they conform to a certain criteria in order to increase the degree of confidence of the intended users of these books of account by giving either reasonable assurance or limited assurance. Now, with that understanding, allow me to make some adjustment here for the purpose of understanding. Now, we can say assurance engagement, now someone follow, it is the process of examination of the subject matter, meaning I've changed from examination of books of account to subject matter, meaning it is the process of examination of subject matter with the intention trying to increase the degree of confidence of the intended users of that subject matter by confirming whether this subject matter conforms to a certain criteria, by confirming whether this subject matter conforms to a certain criteria. Once you have done so, then you can give either reasonable assurance or limited assurance. So if you are not kindly, you can note that definition on the purpose of understanding that an assurance engagement, it is the process of examination. Please just note that somewhere. Assurance engagement, it is the process of examination of subject matter. It is a process of examination of subject matter with intention of trying to confirm, whether the subject matter conforms to a certain criteria, whether the subject matter conforms to a certain criteria, in order to increase the degree of confidence, of the intended users of the subject matter, by giving either reasonable assurance, or limited assurance. And that's all about assurance engagement. Now, let's get our discussion a bit deeper. We have seen we are examining the books of account, we are examining the subject matter in order to increase the degree of confidence of the intended users of the subject matter by giving either reasonable assurance or limited assurance. I know if I were to lead that discussion at that point, then someone would be interested to confirm what is the difference between a reasonable assurance and a limited assurance. Now, when we talk of reasonable assurance, this refers to a positive form of assurance or a high level form of assurance. I repeat, reasonable assurance. This refers to a positive form of assurance or a high level form of assurance that an auditor gives after he has audited historical financial information. I repeat, reasonable assurance. This is a positive form of assurance that an auditor will give, is a positive form of assurance, or a high level form of assurance that an auditor will give after he has audited historical financial information. Now, limited form of assurance, this is a negative form of assurance or a low level form of assurance that an auditor will give after he has audited a prospective financial information, that is a PFI. I repeat, limited form of assurance. This is a negative form of assurance that an auditor will give after he has audited prospective financial information. Now, some will ask you then, what's the difference between reasonable assurance and limited assurance? So far, we can see the differences. Reasonable, we have seen, is a positive form of assurance or a high level form of assurance. Limited form of assurance, we have said this is a negative form of assurance or a low level form of assurance. Now, something else we need to note is that we give reasonable form of assurance after we have audited historical financial information. Now, historical financial information, this refers to any information that is available in the public domain. I repeat, historical financial information, this refers to any information that is available in the public domain. Now, think of this. You have been given financial year 2021, 2022, or maybe 2022, 2023. Or maybe probably someone gave you financial year 2019, 2020. All this information, this refers to information that is already available in the public domain, is information that relates to activities that already has taken place. Now, that is historical financial information. On the other hand, when we talk of PFI, this refers to any information that has not taken place, but we are assuming this information take place in future. Allow me to break this down for you. So, a PF5, that is a PF5, we just say PF5, this refers to any information of activities that has not taken place, but we are assuming that information will take place in future. Meaning a PF5, this refers to any information that is based on assumption. So if somebody asks you anything to do with PF5, then PF5, this refers to any information that is based on assumption of activities that has not taken place, but we are assuming that those activities will take place in near future. Now, let's say, for example, Sarah gives you a forecast. Or maybe you'll be given a projection. Or probably you have budget. All of these activities are activities that are based on assumption. Now, let me be a bit practical here. Assuming, based on the information that we had here, we did talk of financial year 2019, 2020. We talked of 2019, 2020, 2020, 2021, 2021, 2022, then 2022, maybe 2023. Let's assume our profit for 2019 was 2 million. For 2021, the profit was 4 million. 2022, the profit was 6 million. The profit was at 6 million. In 2023, the profit was 8 million. If I were to ask what would be the profit, maybe 2024, 2025, no, 2023, 2024, or maybe 2024, 2025, or maybe 2025, 2026. If I were to ask you what would be the profit for 2023, 2024, you will tell me the profits will be 10 million. Then for 2024, 2025, probably you tell me the profit is 12 million. For 2025, 2026, maybe you can tell me the profit was 14 million. The profit will be 14 million. Meaning, the information that we had historically, this is now HFY, that is financial information. Our profit has been growing by a margin of 2 million. Our profit was growing by a margin of 2 million. So for 2023, 2024, which already we have not arrived yet, our assumption will be the profit will grow by the same margin of 2 million. So our profit will be 10 million. Then our assumption for 2024 will be 12 million. Our next assumption will be 14 million. Meaning, when we talk of a PF5, we are saying that this refers to any information that is based on assumption of activities that has not taken place, but we are assuming that those activities will take place in near future. So in summary, when we talk of PF5, we are saying that PF5, this refers to any information that is based on an assumption of activities that has not taken place, but we are assuming that those activities will take place in the near future. I've given you a good example. You can be given a forecast. We can be given a projection, or maybe we can be given a budget. Now, when talking about forecast, this refers to a best estimate assumption. I repeat, a forecast, this refers to best estimate assumption, meaning it is a short term. It's a short term assumption, e.g. 1 year. Now, a projection, this is hypothetical assumption. This is hypothetical assumption, e.g. maybe 5 years assumption, maybe 10 years, meaning we are making projections. A budget, we can have capital budget. We can have capital budget. We can also have maybe expenditure budget, etc, etc, etc. Meaning in summary, a reasonable assurance, we have said, it is a positive form of assurance or a high level form of assurance that an author will give after he has audited historical financial information. Whereby we have said historical financial information, this refers to information of activities that has not taken place, but we are assuming that, historical financial information, this refers to activities that already has taken place, and that information is available in the public domain. Then PF5, we have said this is any information that is based on assumption of activities that have not taken place, but we are assuming those activities will take place in future. So I think that's all you need to know at that point. With that understanding, allow me to introduce different types of assurances that you can give. So far, I know you understand elements of assurance engagement. It's my belief now you can define what is assurance engagement. And also, I tend to believe that you know the difference between a reasonable assurance and a limited form of assurance. Now, we have said reasonable assurance, we have said this is a positive form of assurance. Then we have said we have a limited assurance, whereby we have said this is a negative form of assurance. Of course, we have other forms of assurances that we don't talk much about them, because as an auditor, you don't pay attention to some of these assurances. Like now, you can have absolute form of assurance. Absolute form of assurance. And of course, we can talk of remote. Now, when you talk of absolute form of assurance, this refers to a 100% form of assurance. Remember, we have said reasonable, this is a positive form of assurance. But of course, we have absolute assurance, whereby absolute assurance, this refers to 100% form of assurance. Now, listen somebody. As an auditor, you can't express absolute assurance. The reason why you express either reasonable assurance or limited assurance is in order for you to reduce your engagement risk. Meaning, as an auditor, you can give either reasonable assurance or you can give limited assurance in order to reduce your engagement risk. Now, engagement risk, this refers to the susceptibility or the possibility that an auditor is likely to express inappropriate form of assurance. Meaning, when you are giving reasonable assurance, you are trying to reduce your engagement risk to a lower level. Remember, we have said absolute assurance, this is 100% form of assurance, that we have seen an auditor does not express absolute assurance. And now the reason will be number one, the reason why auditors do not express absolute assurance, I think you can also know that somewhere. Reasons why auditors do not express absolute assurance. Of course, number one, because of number one, selective testing. Meaning, as an auditor, you can only give a reasonable assurance and not absolute assurance, because 100% form of assurance or absolute assurance, we have said this is whereby you are trying to tell people that everything is correct, everything is perfect. But as an auditor, you can't give 100% form of assurance because you don't audit everything 100% in that organization. Meaning, we do selective testing, meaning out of a given population, you can pick few items randomly and gather sufficient appropriate evidence and generalize the characteristic behavior of your sample to be a representative of the total population. Meaning, you can't give 100% of assurance on that information. Now, the information that you are having is based on some selective testing. You have just picked few items from the total population and you have generalized the characteristic behavior of your information to be a representative of the total population. Meaning out of maybe 500 invoices, you might not inspect all the 500 invoices. You might just sample a few randomly from the total population of 500. Then the characteristic behavior that you're going to get from those sampled invoices will be a representative of the total population. Meaning, out of the few population that, out of the few invoices that you'll sample, if all the invoices are signed, if all the invoices has the correct amount, they are accurately calculated, then you can assume that all invoices are well calculated. But assuming you are to increase your sample size, probably you'll meet heterogeneous characteristics whereby some other invoices that you did not pick as a material misstatement and other invoices actually that you picked, you did not pick, they are not signed. Meaning, but your assumption when you picked a small sample size, you assume that everything was correct. That's why we have said you can't give 100% form of assurance. Number two, because of inherent limitations of ICS. The inherent limitations of ICS, meaning the internal control system within the organization, they are always there. But now, those internal control system, despite that, yes, they are there, they might not be able to prevent and detect any possibility of error and fraud within that organization. Meaning, this internal control system could be there, yes, but this internal control system could be weak. Now, the subject matter that you are working on could be a bit technical. So, because of the inherent limitations of ICS, there isn't any way you can give 100% form of assurance. Number three, as an auditor, you do not give 100% form of assurance because some of the area that you are dealing with, they are a bit technical in nature. Meaning, there are those areas whereby you want to engage an expert. There are those areas that are a bit complicated for you. And because of that, of course, you will not give 100% form of assurance. Now, some of the evidence, number four, that we get are persuasive in nature. Persuasive rather than conclusive. Some of the evidence that we get, that evidence is persuasive rather than conclusive. Meaning, for you to get this information from this person, you are trying to persuade them to give you that information. And of course, they will give you what they want you to know. Meaning there is always a symmetry of information when it comes to auditing. Some of the information that you have gathered, probably that is not the true position, but the auditor or maybe the accountant in charge will just give you the information that wants you to know. Meaning, some of the information that we get, you are just persuading this person to give you that information. Meaning, you are saying, as an auditor, you can't give 100% more assurance because of number one, because of selective testing. Number two, of course, we have inherent limitations of internal control system. Of course, we have the technicalities involved when you're working on the subject matter. And of course, some of the information that we have is persuasive rather than conclusive. Meaning, because of this fact, then as an author, of course, you can't give 100% form of assurance. Remote assurance, of course, you have to say that is something that is fluid. Meaning, of course, actually, we never talk of a remote form of assurance. It's either you are giving a reasonable form of assurance or you are giving a limited form of assurance. So far, any question? Meshach, are you following?
Yeah, sure, I'm following.
Good. Magai, how are you?
I'm still very okay.
Thank you so much. So far, so good. I'm so excited that at least I can hear you gentlemen, you are still hanging around. Now, there's something else I want us to discuss, even before we go to the assurance engagement. Now, before you do an assurance engagement, of course, somebody has to engage you, either to accept, or you can decide to not continue auditing an organization that you've been auditing before. Meaning, there is what we call acceptance and continuance. Acceptance and continuance. Now, acceptance and continuance, this is whereby you are trying to consider what are some of the factors that I need to consider before accepting an engagement and an assurance engagement. Meaning, when you are doing acceptance and continuance, now the acceptance part, this is whereby you want to confirm before accepting this engagement. What are some of the factors that I should consider before accepting this engagement? Of course, we'll be discussing that in details in our topic 4, factors considered before accepting any engagement, whereby I have to consider issue of legal statutory matters. I have to consider issues of professional matters. I have to consider practical matters. Of course, I need to consider professional courtesy. I think I need to bring this down better way for you to understand. Meaning, under acceptance and continuous, this will be you're trying to confirm acceptance and continuance. Now, acceptance here, this whereby you are accepting this engagement for the first time. Continuance is whereby you have been auditing this organization, but now you are contemplating either to continue auditing or not continue auditing that organization. Now, before accepting an engagement, there are some factors that you need to consider. Number one, you need to consider legal statutory matters. Number two, you need to consider professional matters. Number three, you need to consider practical matters. Number four, you need to consider professional courtesy. Professional courtesy. Meaning, as an author, before accepting an engagement, consider legal statutory matters. Now, under legal here, this is where you're trying to confirm. Before I accept this engagement, this company I'm auditing, are they legally registered? Number two, before accepting this engagement, I want to confirm whether this company I'm auditing, do I qualify to audit this client? Meaning, am I competent enough to audit this client? Do I qualify? Because we say, as an auditor, if you have been disqualified from auditing a holding company or a subsidiary company or any other related party, you can't accept as engagement. Meaning, if I used to audit maybe a holding company and I was disqualified from auditing that holding company, then I can't audit a subsidiary of the same. That is not accepted. Then number three, under legal matters, I also need to consider What about the size of this client? What about the regulatory framework? I need to consider what about their ICS? I need to consider what about their type of products? It's very important for me to consider what about industry where this company is operating in. Meaning under legal matters, I need to consider these factors before accepting that engagement. Then number two, I also need to consider professional matters. Now, when we talk of professional matters, here we are referring to issues of PICOT or SAFI. Now, this is coming topic 3, you don't need to worry. Meaning I'm interested on fundamental principles. Meaning professional matters, this is all about the fundamental principles. Meaning I need to confirm before accepting this engagement, will I be able to exercise my professional behavior? Before accepting this engagement, will I be able to exercise my integrity? Before accepting this engagement, what about confidentiality? Will I be able to demonstrate competence and due care? Will I be able to maintain objectivity, independence? Then finally, will I be able to adhere to the technical standards? That's all about PICOT, meaning professional behavior, integrity, competence and due care, confidentiality, objectivity, independence, and technical standard. Meaning, before accepting engagement, consider, will I be able to own this organization and still be able to express my opinion independently? When I know very well, my father is working the same organization, I'm coming in to audit my father. My sister is working this organization, she is the chief accountant, and I'm coming in to audit her. Will I be able to maintain independence? Now, I have a problem here. I like my mom so much. Now, she is accountant at that organization, I'm coming to audit my mom. Will I be able to express my opinion independently if I realize there's some material misstatement in the financial statement? So meaning, before accepting engagement, I need to confirm who is working in that organization, who is related with me. Meaning, I'm interested on any possibility of serving. Now, serving here, we are referring to the first two fundamental principles, meaning I may have some self-interest, the responsibility of self-review, maybe the responsibility of adverse threat, the responsibility of familiarity, we might have some intimidation or maybe management threat. So before accepting an engagement, will I be able to maintain my objectivity or is there any possibility of any threat? Meaning I might have some self-interest, either financial or non-financial interest. I've invested in that company, I have some shares in this company. Or probably I'm planning to have a loan from this company. Or I'm looking for an employment, other than just be an officer, I want to look for an employment in this company. Meaning already there's an element of conflict of interest. Or probably I prepare their financial statement or the internal control system and I'm coming to audit them. Meaning already there's possibility of self-review. Meaning self-review, this is whereby you are re-evaluating your own subject matter. Or maybe there is advocacy, I tried to defend this client at the court of law. Or probably I was still trying to promote their shares in a listed company. Meaning already there's an element of advocacy. Or maybe this is my 8th year, 9th year auditing the same company, meaning there's element of familiarity. Or maybe I can be intimidated now that my daughter is working this organization. My son is working this organization. Someone can intimidate me either by firing my son if at all I express inappropriate opinion depending on what they want. So I have to consider, is there a possibility of any threat to the fundamental principle? The number next, practical matters. Now under practical matters here, this is whereby we are interested on issues of resources. Now, when you refer to resources here, we are referring to resources in terms of time, resources in terms of the number of staff that we need to have, resources in terms of any possibility of other affiliations. Meaning, before accepting any engagement, it's very important for you to confirm. What about practical matters? We have enough resources in terms of what? Time. There is possibility that we are only this organization, yes, and yet we still have other organizations that we are auditing and they have the same similar year end. Meaning, I'm auditing this organization which financial year ends 30th June. This is now another company that I'm considering accepting this engagement, and yet they have the same year end. So I'm trying to confirm, if I accept this engagement, will I be able to audit both of these companies and be able to express their opinion at the right time? So it's an issue that I need to consider. I also need to consider issues of number of staff. Maybe it's a multinational company, or maybe it's a larger company, and our own firm is a bit small. So I have to confirm, before accepting this engagement, will you be able to cover this client if at all we are to own this organization? So it's an issue that I need to consider before I accept that engagement. Then finally, of course, there is professional courtesy. Now, professional courtesy, this is all about communicating to the previous auditor. Meaning, it is a requirement for you as an auditor, before you accept an engagement, you should communicate with the previous auditor. Now, the question is then, why do I need to communicate with the previous auditor? I want to get working papers from the previous auditor. I want to understand some of the potential risks that I'm likely to face when I'm auditing this organization. I'm communicating with the previous auditor because I also want to understand the billing arrangement. How much am I supposed to charge this client? Meaning, before accepting an engagement, it's very important for us to consider legal matters, professional matters, practical matters, and professional matters. Then finally, of course, there's something else we call preconditions. Preconditions for assurance engagement. Now, preconditions, this refers to the agreement that we need to make before we accept an engagement. Meaning, there's difference between factors to consider before accepting an engagement and preconditions that you have to consider before accepting an engagement. Now, meaning preconditions, these are some of the agreements that we need to make even before we commence the assignment. Meaning, before I start auditing your organization, I need to understand, do you understand what is your responsibility as an auditor? And you as management, you understand what is your responsibility. It's a precondition. Meaning, under preconditions, we need to agree, what is your responsibility as management? And what is my responsibility as an auditor? Number two, I also need to consider, before accepting this engagement, is there a subject matter? Because when I'm coming into audit as an auditor, I'm coming to work on a subject matter. Remember, we said subject matter, this refers to the phenomenon or the item that you are auditing. Maybe I'm auditing the internal control systems. Maybe I'm working on financial statements or the books of account. Maybe I'm working on the capacity or the processes of this organization. So I need to understand, when I'm coming in, is there a subject matter? Then number three, of course, we need to consider issues of criteria. Is there a suitable criteria? I'm expecting that this subject matter should conform to a certain criteria. So is that criteria suitable? Meaning it's an issue that I need to consider. Then finally, I want us to work on non-assurance engagement. non-assurance engagement. Now remember, we said assurance engagement is categorized into two, whereby we say we have assurance engagement term and number two, we said we have non-assurance engagement. Now we say assurance engagement, we have said this is a process of examination of books of account with the intention of trying to confirm whether those books of accounts or the subject matter conforms to a certain criteria in order to increase the degree of confidence of the intended users of the subject matter by giving either reasonable assurance or limited assurance. Now, when we talk of non-assurance engagement, this refers to any other form of assurance that does not require expression of any form of assurance. Meaning, non-assurance engagement, this refers to any other engagement outside assurance engagement. E.g., you are doing agreed upon procedures, or maybe you are doing tax consultation, or maybe you are doing management consultation, or probably you're doing compilation returns. Now, you can also be doing due diligence review. Maybe you can be doing attestation. Meaning, when you're doing non-assurance engagement, this refers to any other form of engagement that you can do outside assurance engagement. Now, agreed upon procedure, for example, this refers to a process whereby the practitioner and the responsible party not practitioner, but a responsible party. This whereby a responsible party and another third party engages a practitioner to work on factual finding. This agreed upon procedure, this refers to a process whereby the responsible party, that is the management, and any other third party engages a practitioner to work on the factual finding. Meaning, the management and maybe the debtor, or maybe the creditor, these two parties can enter into agreement and decide to engage a practitioner to work on the factual finding. Meaning, before we bring in a practitioner, we can agree, you and me, to enter into a contract that is a client management relationship. Like now, a debtor can agree with the management that I'll be paying you after 30 days. Meaning you supply me with your goods, I do business with them, and I pay you within 30 days. That is an agreement that we have. Or the management can agree the creditor that yes, you as my supplier, you'll be supplying your products to me, then I pay you after maybe 60 days. That is an agreement between the management and the client. Meaning, if they have such an agreement, at some point they can engage a practitioner to confirm whether what they agreed is being adhered to or somebody violated that contract. Meaning, when you're coming in as an auditor, yours is just confirm on the factual finding. What's the position? Meaning, you are not expected to express any form of assurance, either limited or reasonable form of assurance. Now, tax consultation here, this is whereby you, as a practitioner, you can offer tax consultation services. You can also offer management consultation services, or maybe you can do combination return. Now, combination return here, this is whereby the auditor or maybe the practitioner is expected to prepare the financial statement on the behalf of client. Meaning, you can have disclosures of income statement items, you can have balance sheet item, meaning you'll be given all this information, and it is your business as practitioner to arrange them either into income statement or maybe as a balance sheet. Meaning, you expect to prepare the financial statement. Your business, you are working on compilation return, meaning your business is that just to do compilation return, and you are not expected to express any form of assurance. Due diligence, you can also be engaged to do a due diligence. Due diligence, this is whereby you as an auditor, you are trying to gather some information that we are supposed to be worked on before the organization went into any form of contract, meaning due diligence review. This is whereby this is the caution or the care, that duty of care that the organization need to put into consideration before they enter into any contractual relationship, before they enter into any business relationship. Meaning, you can be engaged to confirm whether this organization, when they were entering into business contract with an organization, they do proper due diligence. And I think that's all about that area. And apparently, it's also the end of the topic one. Actually, that's the end of our topic one. At least we are able to confirm what is assurance engagement. We know elements of assurance engagement. And of course, we need to understand why we don't give absolute assurance, etc., etc., etc. Any question? Magai Kamagai, do you have any question?
I had one.
Yes, please ask.
I'm just trying to, it passed sometimes back, trying to read from where I wrote it. So maybe I'll ask it probably next time.
Oh, okay.
Yeah, once I.
That's okay. That's okay. Just retrace it. Once you get, of course, next time you'll ask. Meshak, do you have any question?
Not really. Don't have at the moment.
Okay. That's excellent. That's excellent. Okay. Then I feel it would be prudent for us to stop there for today. Yes, I feel it be okay. I might not give you much of stuff the first day. I feel it will be okay for us to stop there for today. And possibly before our next class, I would have shared these notes with you so that at least you can go through them, so that in case of any question that probably that might come up as you go through your notes, at least you'll be able to bring up it on in our next class so that you can work on that before we go to the next topic. I'm also considering you also need to have your past paper ready with you. I'll always prefer once you are done with the end topic, you try to go through some questions and try to see how we are supposed to approach them just for the purpose of examination. So I think for today, that is good enough. And I want to wish you a lovely evening. Looking forward to meet you in our next engagement. Thank you and have a lovely evening.
Thanks too, and have a good night too.
Thank you so much.